Good afternoon, everyone. I hope you're trading well today. We're going to look at an absolutely horrific tale of capital raising, something that I've never really seen before. And the best part is, it's not even a microcap stock. We've got Dacian Gold Limited trading at $1.40 today, and they're sitting at 320 million market cap, so they're definitely not in the microcap space. They have 228 million shares at $1.40 at the moment, which represents $320 million in market cap. You just simply multiply shares by share price, and that gives you the market cap. Straightforward enough. Now, before we look into the actual announcement today, let's have a look if we can see what's coming for this company. Let's see if we can spot the fact that these guys may do capital raising and how to avoid it. So, we look at their latest financial document, which is the half year, and we can see based on their revenue and their cost of goods sold, I mean, that's effectively the margin that they've got, and that's the gross profit. So they're pulling in $23.6 million plus operating costs, and you're losing out $68 million there for a total loss of $78.5 million for the half year. The previous year, they lost $7 million. Now, the interesting thing here is impairment loss on asset. That is their single biggest loss. Without that, they'd be sitting at a negative 10 million loss for the half year. So let's have a look at note 11 and what that means a bit later on. Now, what's also worth looking at is cash equivalents. So they've declined in cash equivalent. Obviously, that 7 million had an impact from the previous half year. And they're sitting at just under $300 million in assets. They've got a total liabilities of $185 million. And it's worth comparing to the previous half year that they've got slightly less liabilities, nothing significant. And the assets, they've declined quite heavily. So we should look at where that is. You can see here the mine properties, which is in note 10, has declined quite significantly. So we've gone from $184 million in equity to $106 million in equity. And keep in mind, these guys are running at a loss every half year, at least $10 million and growing. So for a full year, these guys would be losing about $17 million. Roughly. That's just an estimate, just a quick estimate. So if they're losing $17 million a year, and that trajectory is going to continue growing in the negatives, and it's 106 million equity, why is this company worth $320 million? That's the first thing I would ask, is how has that come to be? Is it the gold stock, the gold index price? Is that it? Because it hit a high of $1,700 US. Would that be it? I don't actually know. I don't know the history of the company. I just saw the announcement today and I thought I better have a look at the financial documentation. And this is what we've come to. Now, I haven't even looked at note 11 and 12. To find out exactly what these notes actually mean. So let's have a look at note 11, section 25 and 26. That's page 25 and 26. So this is the first time I'm actually looking at it. So this will be as new to me as it is to you. So 25, let's see if we can make some sense out of the impairment. Material changes to his business and future plans. 40% reduction in mineral resource. And mineral resource estimate decreased by 52% from 1.5 million. Okay, so they've actually got a decrease in mining by the looks of it. Average annual production at an average of that all-in sustaining cost. That's okay. Okay, the exchange rate is in their favor, surely. If they're selling gold in US dollars. So that was note 11 continued. Here we go. Plant. It doesn't. Property and plant. Okay, so it's in decline. And the mine properties are in decline based on note 11. Note 12. Deferred tax assets. And it doesn't really tell us too much. The value of tax losses for income tax purposes is $178 million. Recognizing tax losses of $56 million and recognizing total loss of $118. That might just be paper losses. It doesn't seem overly significant. At least the note 12 doesn't. Note 11 seems to be quite significant. As you can see, the losses in impairment in the value of the mine, effectively. So that seems quite significant, which begs the question, what caused this rise? If they knew the outcome of this mine, I mean, this announcement only came out recently. So it begs the question of why is this sitting at $320 million? Now, that's not what we really care about. We're looking at the value and saying, right, it's possibly overvalued. At least that's my initial 30-second observation. But the important thing is their financial standing. These guys are losing money hand over fist. They're just giving it away at this point. They're losing $10 million. They haven't got much cash in the bank. They've got 21, and they're losing cash rapidly. So is it really a surprise that we get this announcement here for capital raising? I guess the most horrifying thing about all of this is not just that they're raising $98 million in cash, it's that they're doing it at a 79% and 60% discount. So let me show you what that means for the average investor who's bought in at around $1.40. We've got a 144% increase in the shares on offer. That, I've never seen anything like that before. I don't think I've ever seen even a 100% increase. Like these micro-cap stocks on the ASX, they'll typically go from 500 million shares to maybe an extra 120 million shares, and they'll probably do a 20% discount at worst. But we've got a 144% increase at a 79 and 60% discount. That is horrifying. So let me show you what that looks like. When you add in all the shares together, in order to maintain the same market cap, the price per share should drop to about 57.5 cents. And if you invested at $1.40, let's say 140 minus 57.5. 140 minus 57. 83-cent drop. That's horrifying. That is a horrifying drop as a percentage. That's a 60% drop approximately. Imagine if you're an investor in a small cap stock that you think is in gold because it's the booming commodity for the day, in fact, for the month, if not the year, that you're just going to lose 60% of your value almost immediately purely from dilution. So the market cap will likely remain the same. It might still sit at 320 million market cap, but the dilution will just wreck you as an investor. You'll be sitting at a 60% loss nearly. I mean, we don't know what the actual price will be when the market opens. When this comes out of trading halt, because it's currently suspended, we can make a fair assumption that it's going to sit around 57 cents, or at least come close to that number. So, guys, check your quarterly and half-year financial documentation. If your stock is rising, but they're running out of cash, and their equity is in heavy decline, ask yourself, is that really a stock you want to be holding? I know it's gold, don't get me wrong. People want to ride the gold wave at the moment. I understand that. But at least be sensible and check the financial documentation. That took me a whole 5 minutes of research to look at this company and go, hold on. $320 million for $106 million equity and $24 million in revenues, but ultimately $78 million loss. With impairments, even if we ignore impairments, they're still sitting at negative $10 million for the half year. That's negative $17 million all up, approximately for the year. So if you're losing that much money, and they've got about 10 million cash in the bank left, they were sitting at 35 mil for the half year, and the next half year was 25, and now they're probably sitting at less than $10 million cash. Of course they're going to do capital raising. Why would you invest or even touch a stock like that? Now, this isn't financial advice. You can buy this stock if you want, go for it. This is just my opinion. And it bloody looks horrible.